Mr. Sanjay Sethi, the MD and CEO at Chalet Hotels, to tell us all of that. Mr. Sethi, hi, good morning. Thank you so much for making time and speaking with us. To begin with, I wanted to understand what's been the demand momentum on the ground like. What are the occupancy levels that you are tracking at this point of time? How's been the average room rate at this point of time?
Good morning. The big story in hospitality is, I think, the rate movement, which has been very positive across India and in both segments, the leisure segment and the business travel segment. And I think it's held us well because new rates seem to have got locked in at the benchmarks that have been created over the last few quarters. And they seem to be the base rate to work off for future quarters and years. So very positive story, as the previous speaker said, looking very bullish on hospitality in the country.
Point in time, demand and supply will match up. Is that 2 years away, 3 years away? How far is that?
Morning, Nikunj. I think we're at least 4 years away from demand and supply catching up. The reason being hotels are brick and mortar business, which take time to develop. And from announcing a hotel to actually opening it to guests can be anywhere between 4 to 7 years, depending on how efficient the organization is in developing the hotels. So we've got a fair length of runway, 4 years at least.
Specifically, what about business travel? Because that's where the large multiplier would kick in. What are the trends in business travel? Leisure travel, all of us know that it's hard to find a hotel, difficult to get a booking going. Even though we make calls, it's difficult because occupancies are great. But business travel is where we want to understand the trend.
Continues to be very strong. I think it's been strong for the last 3 quarters now, quarter after quarter. The cities that we are talking about as far as business travel is concerned have the same issue on the demand and supply side. Demand is outpacing supply by a significant margin, and supply is not easy to come by. In fact, even more difficult in large cities because real estate prices are through the roof. So there are natural barriers to entry that have been created in the big cities for new supply to come in. There are some projects underway in most cities, but they are only a fraction of what the current base supply is. So there's no concern in any of the, say, if you take the top 6, 7 cities in the country, really no concern on supply side growing at a pace which will affect occupancies or rates, at least for the next 4 years.
We understand that this year also a very strong advantage has come to the hotel industry because of G20. Now that really could be a 1-year phenomenon. A, how much has that impacted your business? And B, next year when the G20 push is not going to be there, will anything change meaningfully?
So Nikunj, I think the G20 is spread thin across the country. So I don't think it's impacting business of any hotel company of any size materially right now. But what it has done is that wherever it goes, irrespective of the hotel that the event happens in, it creates a compression in the market. I was in Goa just now, till day before yesterday, for the G20 meet on tourism. And the cities still had rooms, but the whole hotel that I was staying in was occupied, and therefore it created compression. And thereby, a lot of the business got pushed out to other hotels. And that's happening in the city hotels also. So if an event happens, say, in Mumbai, and a hotel is occupied, the regular business of that hotel gets displaced to other hotels and fills up the city. That's one. Second, the more important thing is, I think G20 is a 1-year phenomena as far as current business is concerned. But my belief is that the spin-off effect of G20 is going to be far further reaching than just 1 year, because the people who are coming into India are establishing relationships, setting up businesses or expanding businesses, and this will continue to benefit India for years to come. So therefore, in my mind, I'm seeing G20 as a positive for a long time to come, not just this year.
Cricket World Cup, will that be an upside? Is that something which could get captured in the second half of this year, the fact that Cricket World Cup is due?
So Cricket World Cup is again a month-long event. It will create compression when the matches happen. Clearly, Ahmedabad is going to benefit. We've heard that the India-Pak match is likely to happen there. And we'll see probably, I think, one of the semis or the finals happening there too. The schedule isn't out, But yes, again, it's spread thin. It'll create compression for those few days in the market. But it's a one-off event. We don't get too excited about one-off benefits that you get. It's the long-term benefit that we've got to look at. And I think G20 has potentially a long-term benefit.
Just wanted to understand what happens to ARR. Anisha was chatting with Navjeet
of Hilton.
Ahluwalia of Hilton, right, at the Conrad Pune just last week. And, he said something which really, sort of stuck out for all of us. He said that forget it, ARRs are not even going to come back to those 2019 levels. Is that the reality, Sanjay, that we'll all have to live with?
There seems to be a comparison of recent past as far as average room rates are concerned in the industry. And I think you got to look a little wider than that. And Navjeet is right. Our ARRs were underplayed for several years. And today we are sort of catching up to the natural average room rates of for the industry in India. We're still far away from the other gateway cities in the world. We are still, I think the big cities are still 3x India. But even if you don't compare to the New Yorks and the Parises of the world, you can't be discounted by 50% on Singapore. And we are currently discounted by 50% of Singapore. Will we get to Singapore rate? I don't think so. But will we close the gap? Absolutely. So in my view, we are looking at least low to double-digit rate growths year on year for the next 2 years, and then probably stabilize to inflationary growths after that.
A lot of your peers are talking about experimenting with new formats. Taj has moved into Cumin. They've moved into Amar Trail. ITC is also experimenting with a lot of things. Is Chalet also planning to do something which is strikingly different, putting technology and outdoor experiences together?
So Chalet's got its own diversification plan, which is very different than some of the other hotel companies, right? To begin with, we were not an hotel operating company. We are now getting into more and more operations as we sign more franchise contracts, and some hotels we run under their own respective brands. Our diversification is more on the asset class side, Nikunj, and I think that's really helped us through the pandemic and is likely to help us going forward very strongly. Just to share some numbers, we are currently 500,000 square foot of office space on rent. We're developing another 2.5 million square foot. That will still be only a small fraction of the total business, but it will give us a significant amount of stability. 2 million out of the 3 million square foot is going to be in the healthy rental markets of Mumbai, and 1 million in Bangalore. The Bangalore 1 million is almost ready. Around 800,000 Mumbai is almost ready. And the balance 800,000 square foot that we've developed will start soon and get ready in about 2 to 2.5 years' time. All in all, 3 million square foot. And it's an easy math. The rentals in Mumbai in that region are about 125 odd rupees. Bangalore is about 62 rupees. Flow through from both the cities is going to be in the 90-92% mark. So clearly healthy EBITDAs flowing through into the Chalet balance sheet on account of these office assets, which will continue to support the business through its cyclicality as and when that happens.
And Mr. Sethi, before we let you go, just a quick word on the occupancy level that we started the conversation with. I understand it's trending between 70 to 80% for the industry. Is that likely to be the case for the next, let's say, 12 to 24 months at least?
So, you'll have monthly and quarterly variations that happen, which are natural variations across the year, right? Quarter 1 and quarter 2 in our financial year is always typically lower than the other quarters, especially for city hotels. And then it sort of ramps up very rapidly in quarter 3, quarter 4. Overall, annually, yes, I think everyone's going to be in that 70 to 80% mark. Rates have grown tremendously, so the RevPAR will be very, very strong. We expect RevPARs to be in the range across the industry at least 20% higher than what it was last year. And I think that's where the industry is likely to be positioned at for this year.
Okay, thank you, Mr. Sethi, for joining us and talking to us about the fundamentals of the hospitality industry, which look quite promising at the moment.